33. Now, we've not known our accumulated fund because it is the excess of this over current liability. So let's go to current liability. We have, let's look at it, we have loan. Loan is the current liability 1080. Then let's look at the creditors, that of information of 1195. Then we have accruals. That one has been listed. Water 13 naira, electricity you have 130. Then loan interest 33, miscellaneous we have 75. Then receipt in advance, it is the organization that is receiving it in advance, so it is a liability to the organization. So if you add it, you have 4156. Now you want to get your accumulated fund. So accumulated fund will be total asset divided by total asset minus current liability. So 16133 minus 2156, you have what we call 13,977. So your accumulated fund is 13,977. So that is how we balance our calculation, that of A. Then we now proceed to prepare trading account. You know, I told you the other time that trading account occur when a company engage in trading activities. So the company engage in trading activities, they have to prepare back trading, and they also prepare income and expectation to know whether there is surplus, or we don't use net profit here, or we use surplus or deficit. So here we go. Now, before we prepare trading account, you know, everything has a fundamental of which we have to be very careful when we are preparing. Don't forget we have additional information, because when we prepare trading account, we need purchases and we need sales, but it is not given in the question. Now, if it is not given in the question and you want to get your purchases and you want to get your sales, how do you go about it? What you will do is that you prepare purchases ledger account and the sales ledger control account, and that's why control account is very important. You must know it from the beginning. It will help you when you are preparing something like a non-profit organization account. Now let's prepare purchases ledger account first. Purchases ledger control account is also the same thing that we did in SS1. It has no difference at all. It's the replication of the same thing. Now let's look at the information. Look at your creditors, because you can call it creditors control account. So now we trace it from creditor. The opening balance of creditor, is also appear in the control account that we do normally do in the SS1. This is where opening creditors always is. So we have a 47 because we want to get our purchases here. Now at the end of the day, let us now look at the question. Let's look at the question. Maybe we have a cash paid to the supplier. Let's look at the question. You see whether we have a cash paid. There is no cash paid to supplier, but we have a bar purchases. So now when we have purchases, it's also the same thing as the payment to supplier. So you have a cash, you represent it with a cash, and that is a 92937. So it's also same thing as bar paid to the supplier. So we call it bar purchase. So we want to get our closing at the end, closing debtor at the end of the day. Let's get our closing debtor creditor at the end of the day. So when we do that, our closing creditor is 901. Just look at it. So having done this, then let's now get our purchases. So if we add this from this, we have a 3838 at the end of the day. Now we now let it from balance BF. That's then we get our purchases. So if you let it from this, you have a 3411. So that is our purchases, and that's why it's very important. You know, when we are preparing a control account, we are preparing, that means credit has been involved. So we have to adjust to get. But here we have been given closing and opening. So, but we've not been we've not gotten our purchases of which we've done here. Now we want to get our sales, the total sales that was sales at the end of the day. So sales ledger control account. Now here, you know, I believe you are familiar with the debtors account. We also call it debtors account. You know that our balance, opening balance, is here. So our opening balance is 231. We want to get our sales at the end of the day. Then let's see if you have a bar receipt. Let's see if you have a receipt from the customer. Then receipt from users of a club. Let's see if we have a bar sales here, and that is 431. So it's also same thing as a cash receipt from the customers. So we have a cash. So that is a 4030. So this is cash receipt from the customer. Then we have a closing debtor, which is a balance CD. If you look at it, we have a balance. Our balance CD is 50 naira. So you had it, and that is 4080. Then let's let it from this to get our sales. So at the end of the day, we have a 3849. It is possible they don't give you sales at the end of the day, because you know that when we get our sales is telling us about the total sales and the credit sales. So credit sales for total sales is same thing as the credit sales, and cash sales is same thing as the total sales. So these are total sales and these are total purchase. If you are not given sales purchases in the question, these are you must prepare control account for it before you start preparing trading account. Now let's now prepare our trading account. We call it bar trading. Bar trading account. Don't forget, debit and credit is very important. Now let's begin to take it one after the other. The first item is the opening stock. You know that that of 115 is our opening stock. So that 1195, information that 115 is opening, while that of 31/12/1995 is closing. So of which we've done here in the purchase and the sales. So we have the opening stock. So our opening stock is 291. Then we now had purchases. Our purchases is 3411. Now let's add it together. We have 3702. Now let's let our closing stock. is 394. So we have 3308. Now let's prepare. Let's put this side as the sales. So our sales is 3849. Now we want to get back profit at the end of the day. So let's say from cost of goods sold. So we have a gross profit, and that is 541. So we have 3849. We have 3849. So that is that on bar trading account. So this is what we call bar profit. Though it is not for profit making, but at least when you engage in trading activities, there is no way you won't have profit. So we are preparing profit not because we want to make a profit, but we are preparing it to ascertain the profit that was done, that will be realized in the trading activity. Now let's prepare income and expenditure account, which is also the same thing as profit and loss. Trading profit and loss account is exactly the same thing we prepare in trading account, but there are some items that it's just the little items that are different from that of trading profit and loss. So income and expenditure. Income and expenditure account. So the way we prepare our profit and loss, transfer this to here. You have this is the income side, this is the expenditure side. Exactly the way, you know, in trading profit and loss, this one represents expenses. Expenditure is also the same thing as expenses. So having done that, they will now transfer our gross profit down here, which is a bar profit. Our bar profit is let's look at our bar profit at